Bloomberg reported that the company is exploring a deal with the Canadian activewear maker Gildan. Gildan is said to be considering a cash and stock offer valuing the underwear brand at about $4.5 billion, including debt. Abigail Gilmartin covers the U.S. retail sector for us at Bloomberg Intelligence, specifically athleisure footwear. And she joins us right now to talk a little bit more about this, a surprise of a deal. It also seems like there's some overlap, or maybe not.
Yeah, definitely. It'll be bringing together two of the biggest basic apparel manufacturers globally. So the overlap really is the basics, the T-shirts that Gildan has a big share in, and then the innerwear, which Hanes brands, as we know, does pretty well in.
Which for some of that is interchangeable.
Yes, and then some of that is interchangeable, and both of them have tried to kind of do that. So together, I think it'll be bringing them together and really allowing them to leverage their sourcing and manufacturing abilities to drive scale.
Why now? Has it something to do with the price? I mean, obviously, we're seeing a huge rally today for Hanes brands, up 27% at this point, but $5 billion?
Yeah, so I think that this has been considered for a while under Glenn Chimandi of the Gildan brand, but there was some shareholder issues with that, which happened last year. So I think at this point now they're both facing tariffs and macro headwinds, and combining them together will allow them to leverage their scale and kind of drive more margin upside at a time when their costs are under pressure.
But when you say margin upside, you're saying pricing power in terms of what they're passing on to the consumer, or is this going to be a merger that allows them to actually decrease their costs or at least keep them contained?
That's a great question. So one is pricing power, definitely merging together with wholesaler distributors, especially. They'll have greater pricing power, especially in an area where price is very key to the basics market. Additionally,
because nobody wants to pay like $1 gazillion for it. It's like when you go to a concert and charges $60 for a t-shirt.
Exactly.
Which is just Gildan with something silk screened on it.
Yeah, Gildan's selling their $3 t-shirt for someone else to take it and then, make it more and then sell it. So I think it makes a lot of sense for that.
What about the activewear? So obviously Hanes brands already decided to get rid of Champion or divest it.
Yeah.
Will Gildan, miss out on that, or is this all part of a larger plan?
No, this is all more of a larger plan, I think. It's going to allow Gildan to kind of break into Hanes brands has a higher gross margin. They have higher, more branded products per se, whereas Gildan is just the commoditized thing. So that's going to give them higher margins, but it's also going to give them greater relationships with wholesale distributors that Hanes brand has already.
Any issues that we should be looking for with regards to regulation? Is this a deal that's just going to fly through, or should we be concerned about a potential antitrust pushback, which I know it's kind of a ridiculous question with this administration, but I have to ask.
Yes. Yeah. Well, so, I think there'll definitely be some review, making sure the market shares are, because it's very consolidated market shares, but we've seen this in the past with other apparel companies that have been able to merge, like PVH and other ones, so.
Yeah, it's fascinating. We sort of know Gildan as, American Apparel and some of those other brands, right? That's how we would know Gildan best. Mind you, I haven't seen an American Apparel store in a long time. Thank you so much. They do not exist anymore, exactly. Abigail Gilmartin of Bloomberg Intelligence. Romaine,